What is the most important commodity in the world? Some argue that it's oil. In today's video, we are going to look at oil as a result of the conflict, what has happened here, how this can actually get to $150 a barrel, and what that would mean for you. You came here for the truth, so let me unveil that for you. I want to show you what's going on right now. Obviously, the previous video I did to this one, it was demonetized. We have to look at this data. I got to be careful with the words I say, but I'm going to give you all the information you need to know, and then we're going to look at what you can do about it. How does that sound? Let's begin. Here we have it. We're going to look at this. Oil soars amid Middle East conflict. Gold gains as well. You could see that it had fallen a little bit here, and I can show you the chart in just a second, but it's important to note this out of Forbes. Without question, oil prices will be affected by the current conflict. Anywhere in the Middle East, you've got some tensions. Of course, that's going to produce volatility in the oil market, even when it's far away from any oil fields or indeed oil producing nations. And so we see that right now, today. I have a few notes that I need to share with you and, of course, make you understand what's going on for you, the individual. Oil will likely remain elevated on these tensions. It's not going to go away anytime soon. This looks to be something that could extend out for months, maybe even longer. Production may increase next year, so prices could stay high up until then. So at this point in time, it looks like the production cuts that Saudi Arabia has suggested that they will continue indefinitely throughout the year, that is going to go on. But next year, if prices are too elevated, they may cut. And if Iran gets pulled into this conflict, then $150 a barrel is absolutely possible without even increased demand. So let's just say demand stays steady from here. Saudi Arabia leaves their production the way it is, but Iran gets pulled in, we can actually have $150 a barrel being a possibility. Not because of that one factor. It starts to create more speculation. That's very, very typical inside of the oil market, other commodities as well. But really with oil, you start to see a lot of speculators come in, they pile on, it goes up one way, it goes down the other way. So keep that in mind. For you, the individual, $150 a barrel sustained for a period of time, even not that long, will be extremely detrimental to the economy. It's going to be a bad thing because it's not going to get there overnight and disappear overnight. It will take some time. It's going to be at $130 a barrel. It's going to be at 140, 150, and so on. So how long it stays there, of course, will determine the extent of the damage. But know that the economy just cannot survive on $150 a barrel. We've hit there before. It wouldn't be unique. It's not impossible. It's just a set of conditions that need to happen and will be there. And of course, there are other options. You'll have India saying, I want to buy more oil from Russia because they'll give me a discount. China doing the same. Other countries might say, hey, Russia, let me get some oil from you. But ultimately, when you have that for the Western countries right now, moving into the winter time, resources might be a challenge. We'll see what happens. Look at gold. This is over the last 30 days. I'm just trying to show you gold on the left, silver on the right, and they've popped as a result of this. But ultimately, look at their prices. $18.50, $21. We see this. I feel like I'm in this zone forever. It's never moving, despite the fact that it should be. The way it goes with gold is when all else fails, then they turn to gold. When we see this at a time in which bonds are very valuable, you can get a good return for a short-term bond. Investors will say, well, I'm not going to hide out in gold right now. I'm going to buy this treasury because it is safe. So I'm going to put my money there. I'm going to get 5% back. And the gold, while it might not lose any money, I'm not going to make any money. So this is what's happening. This is what investors are doing. At the same time, we've seen central banks, like we're talking about the physical metal, of course, always in high demand. Central banks buying it up like crazy, individuals buying it up like crazy. Look at Costco, the gold bars. You've seen that. But we're talking about paper. That's what the price is based on. It's based on paper metals. That clearly has not done well over the last while. What oil watchers have to say about the impact of what's going on. Banks put the spotlight on the implications for Iranian crude supplies. That's one thing that we need to understand here. They do talk more about that. Traders fear an escalation could prompt a wider conflict that embroils Tehran and possibly the US. Iranian security officials helped, and they just go on. I got to be careful what I say. Essentially, pulling Iran into the circumstance would make this prices go wild, and of course traders are going to speculate based on that and send it up even further. And so this is a concern. We don't want that. We don't want this to spread out. We want this to be resolved. We want tensions to cool down. We don't want this to happen because the people are not going to win. We want to see that being taken care of, hopefully sooner rather than later. Goldman Sachs, they continue to forecast that the Brent oil price rises gradually from $85 a barrel, that was on Friday, to $100 a barrel in June 2024. That said, the bank identifies two potential implications of the shocking situation on the global oil supply over time. And number one is the important one for me: reduced probability of Saudi-Israeli normalization and the associated boost to Saudi's production. So Saudi Arabia has told the White House that it would be willing to boost oil production early next year if crude prices are high. And that's important, of course, because they have made it clear for the rest of the year, no increase. And so assuming everything stays the way it is, that means that we could see these oil prices remaining, at $85 plus. $85 plus. So if you know that the production is going to remain less than what they think there should be, and there's tensions, and there's possibility of even more tensions, well then the prices could go higher. You do what you want with that. I'm not telling anybody anything, but that's the likely circumstance. Oil traders focus on Iran. You see it there as well. OPEC Plus stands firm as global oil demand teeters. OPEC Plus has opted to keep its current oil production cuts, leading to a drop in the crude oil prices, despite the potential need for even higher prices to affect demand. This was, of course, prior to the situation. Prices started to fall. Everyone started to say, well, maybe that's it. Maybe the prices wouldn't be coming down and so on, all these things. The thought was, okay, we got a little too carried away. But you got to understand something right here is that you have one of the most important commodities in the world. You've got the tensions, you've got the production cuts, you've got general demand coming from China, coming from other places as well. Oil demand is clearly there. And so the prices, they just cannot fall too far unless we enter into a very heavy recession, and that goes globally. If that's the case, absolutely oil prices can fall, as long as there's not, some catastrophic event. And so that's where we are today, here and now. What can you do? What should you do? What should you be looking at? I've got the answers for you. ETFs based on futures are not good for long holds. And this is a generalization, of course, but you'll find, you're like, hey, I've seen this before. Hey, I bought this particular ETF and it just hasn't performed well. I don't understand why. The price of oil's gone up. The price of this commodity's gone up. You can't do those long hold. You start to see a diminishing returns over time. So if you're going to buy into that, you want to do it short term. I'm going to hold this for a week. That's it. You're doing a trade. It's not an investment. If you want to invest, you invest in the companies that deal with it. Okay, there are other ways, but generally, companies that have a proven track record could be good. Proven track record. Look at the case of Rivian. Okay, when you see Tesla, okay, this company has produced a lot of vehicles. There's a lot, you look around, cities, Teslas are everywhere. Tesla's producing those vehicles, it makes a profit. You look at Rivian, people bought into this stock saying this is going to be the next Tesla. I need to get into it. All right, well, what happened? Well, at this time, we can see that Rivian loses $338,000 for every car it manufactures. That's a problem. The reason I mention this is that there's no proof there. They have no business model yet. Let's take the example of Uber, Lyft. Their entire business model, no profit yet, is all predicated on that they will get robo-taxis at some point. These are not good businesses to invest in. Can you make money? Absolutely. But you can look around, there's a million other options. Why would you go into something that doesn't have a proven track record? What are you basing this on? What is the decision that you've made? I'll tell you what, it's a bandwagon, it's another YouTuber, it's based on some article you read. Don't do that. Get all of your knowledge together, and then you're going to base the smart decisions on that data, not on some accusations, not on some wild, who knows what's going on, some unicorns and rainbows out there. Look for negotiations and agreements. Otherwise, prices could absolutely continue to rise. We want to see that. We want to look for these two sides, and hopefully some other country will stand in the middle and say, let's sit down, let's talk. If that happens, you could have the price of oil go down somewhat. And we'll see what happens. I'll bring you all that news. Simply hit that thumbs up button and you will stay informed. This right now, I want to congratulate the winner of the giveaway. My plan, this is once a month currently, but it will go to hopefully once a week, where I'll be giving away something different every week. And the only way to get that is on the Discord. Discord link in the description. And I just wanted to congratulate Jimbo. And I messaged you. I still have to get back to you, but I will. And I'll make sure that you get in on the mentorship call. So that's going to be great. I'm excited about this. There's going to be a weekly one. Only way to get in to the free giveaways every week will be on the Discord. All right. And we have this comment of the day at the bottom. Thanks for getting out the real truth. Damien, thank you for your comment. Most people, unfortunately, have no idea what's really going on. Follow the money. And that is absolutely the case. You want to follow the money because that's how you're going to determine where things are going, where things are moving. Follow the money. It's absolutely true in all cases. Look, if you want to get your financial situation in order, you absolutely have to go through Compass, because Compass right here is where your financial journey starts. And so you go through this, a series of short videos, you're going to be much better off. You're going to understand the financial system better. And it's going to be explained in such a very easy way that anybody can understand. I've also got that link down there for Seeking Alpha. If anybody wants to know, like, hey, what do I do about oil? All this, Seeking Alpha right now, the paid version, not the free stuff you see online. The paid version filled with this information right now related to oil and, of course, everything that's been going on. They still, as far as I last checked, they still had the $50 off. So click that link, and I hope that you appreciate this. I'll see you tomorrow. Take care.